Hi, and welcome to Hedge Fund Investor. I'm Karl-Mikael Siding. One important thing to remember when we're talking about technical analysis is that all the humans have left the building, more or less. The basics, the group psychology basis for technical analysis is several hundred years old, or at least 100 years old. It was based on humans observing other humans trying to find out when was a big investor trying to buy into a stock, and what does that mean for the stock price pattern. So if you're a big investor trying to buy stock in a low liquidity company, then you try to time your trades in a way not to show to the market that you're buying, but at the same time you want to pick up the shares, as many as possible, before maybe some kind of a positive news break out that is the reason for your buying. And before we had all these detailed insider trading laws, then technical analysis was a way to try to understand what information is really out there among the insiders and how are they behaving. Another basis for technical analysis is if you have many different investors that have bought into a share at certain amounts, at certain prices, they can get spooked or start fearing losing their money if the stock is moving away from a previous trend and starting to approach this level where a lot of investors did get into the stock. And once it gets below that price, it can trigger an avalanche of sellers. So this was the original basis, the human psychology basis for technical analysis. And that is what lies behind all these trends, supports, resistance levels, analysis of price channels, etc., or triangles, head and shoulders formations. We will talk about these later. But nowadays, there hardly are any humans left in the technical analysis building. Now it's computers using statistical analysis in real time and adjusting these as the patterns and the statistics change over time, simply because of the computers being there and trading. So you can't really rely on any old patterns anymore. And still, some patterns seem to hold until they don't. That is the key thing to understand about technical analysis. It's still a very dangerous game if you apply TA only and you don't have the added security of a sound financial analysis as well. So you should only buy stocks that are cheap and where you get the technical analysis trends in your favor, in the form of, for example, 200-day moving averages and trend lines, trend channels, and possibly also these Bollinger Bands. So let's take a look at a real example. This is the Tesla stock, and we're starting here sometime in 2019. As you can see here, the stock price, it moved up a lot from 27 to 400. I happen to think that the Tesla stock was expensive more or less the entire way up, but there was no way I was going to short it as long as it had this strong price trend. The strong price trend told me that there are investors interested in Tesla stock, and therefore they will keep buying until their thesis has crashed. And their thesis was based on all these bombastic announcements from the company, and it was also based on a very fast growth for their cars and for their revenues. No matter if the sales and the profits were way too low in compared to the market cap of the company, but still the narrative was positive all the way up. But then we ran into this period from late 2021 until early 2023. This is a period where I was shorting the stock many times over, and here we had the opposite of the previous period. like a strong underlying negative trend, of course, with huge intense rallies in between. The trick was to try to get out of your short position ahead of these intense rallies, and sell again as soon as the stock came back to the falling trend line, or the falling upper part of the stock price channel. So this is a kind of a channel, and since we had lower and lower peaks, and here not even getting all the way up to the falling trend channel, telling me that the stock was getting weaker and weaker, and that the falling trend was actually getting even more secure, enabling me to short it more or less all the way down here to below 100, which actually is the place where I started buying it for the hedge fund that I was at the time. And more recently, I stayed out of the trade all the way here, even though we did get a negative trend again, but I had no reason to short it because I didn't think I had a strong enough case. And then we had this Trump election run-up in the fall of 2024. I did say when it broke out of this, broke out above this resistance, this ceiling here for the stock price, I said that it might just very well double to the even number of 500, which it did. That was, of course, just pure luck. It was me basing my analysis of even numbers on even numbers. Anyway, once we got to this peak and it started showing weakness after falling for a couple of times and not being able to recapture the peak, this was the signal for me to start shorting it, because here it was extremely expensive and it had the trend against it, and you had the Trump rally behind you, and there was hardly anyone who could expect even more positive hype. And rather the opposite happened. Just as could be expected, Tesla's sales numbers were way lower than many had expected. The competition was catching up, which was something people should have expected, but the Tesla bulls didn't want to believe. So once this negative trend was established, I started shorting it. I shorted it all the way down here, and after the final intense selling pressure, there was reason to believe that since the stock had fallen so far below the 200-day moving average, this is the 200 moving average here in orange. Since it has fallen so far below this 200-day moving average, there was a good reason to believe for a bounce. And the bounce did come off of the Bollinger Band and all the way back up to the 200-day moving average, where we are now. And I think that should be a good place to start shorting it again, because I think the negative trend is still here. And the 200-day moving average, unless we break above it, is an excellent place to initiate a new short when we are in a strong negative trend.